Is a NIO explosive rebound on the horizon? Top Chinese EV company, NIO, has been making waves in the world of cars. But recently, something's been brewing. NIO's stock price took a tumble, dropping by a noticeable 2.62% in just 1 month. Now, you might wonder, what's the big deal? In the speedy world of stocks, even a small drop grabs your attention. And this dip isn't just about numbers on a screen, it's a window into NIO's challenges and opportunities. Today, we're diving deep into NIO's journey, from its recent stock slump to the road ahead. We'll decode the hurdles NIO faces and explore the potential for a triumphant comeback. So, let's buckle up and navigate the twists and turns of NIO's exciting ride. NIO's 2.62% drop in stock price over just 1 month is like a red flag waving in the world of fast-paced stocks. This dip may seem small, but it's significant, especially in a realm where seconds can make or break fortunes. You see, keeping an eye on how a company's stock is doing is crucial. It's like checking the weather before a road trip. You want to know what's ahead. And when a stock like NIO takes a hit, it tells you something's happening under the hood. Stock prices are like the heartbeats of a company, and changes in these prices can reveal a lot. They reflect how investors feel about a company's health, its future, and even the broader market. So, when NIO stock takes a dip, it's a signal worth paying attention to.
We actually go back to our principles, okay? Long-term thinking, all right, and good preparations, and just keep patient. We have our in-house R&Ds, okay? It's a very originality, and also we focus on the smart platforms, okay? Try to make sure our product is more scalable and expandable. So in Europe, we've launched the 10 Volta this year, okay? We make sure that all our users who's driving our car is able to enjoy the leading-edge technologies.
NIO has been making a strategic shift, and this time, it's heading towards the European market, which is a big deal. You see, they've managed to snag a license that allows them to sell their electric vehicles in Europe. It's a big deal. Think of it like getting a golden ticket to a new theme park. They're also building their own manufacturing plant right in Europe. It's like setting up a shop in a new neighborhood. This also means they're committed to expanding in Europe. They're not just dipping their toes, they're diving right in. This move speaks volumes about their global ambitions. But NIO isn't the only player eyeing the European EV market. You've got the big names like Volkswagen, BMW, and Mercedes-Benz already on the scene. These are heavyweight champions of the automotive world. So, NIO's stepping into the ring with some fierce competition. The European EV market is huge, and everyone wants a piece of the pie. However, there's more to the story than just NIO's European adventure. You see, the European Union has started an investigation into those Chinese electric vehicle subsidies. It's because the EU wants to make sure everyone's playing by the same rules, like getting a fair shot in the game. So, what's at stake here? If the EU concludes that these Chinese EVs are getting an unfair advantage due to subsidies, they might slap import tariffs on these vehicles. These tariffs would make Chinese EVs more expensive in Europe, potentially affecting sales and competitiveness. Now, why is the EU doing this? They want to protect their own industries and ensure a level playing field. They don't want Chinese EVs flooding their market and undercutting their own car makers. Let's talk about the big players, the European car giants like Volkswagen and BMW. You see, they make a significant chunk of their profits from the Chinese market. It's like a restaurant thrives because of its loyal customers, and in this case, China is their loyal customer. So, any moves that disrupt their business, there could be a big deal. Now, let's flip the coin. If the European Union goes ahead and imposes restrictions on Chinese EVs, it could open up opportunities for US electric vehicle makers like Tesla. How's that? If Chinese EVs become pricier due to tariffs, European consumers might look elsewhere, and Tesla is ready to step in. Tesla has been making strides in the European market, and this situation could give it an extra push. Tesla might just become the go-to option for European EV buyers. But before we continue, we want to thank you for watching this far. Now, looking at NIO's performance in its home turf, China, they've got quite the grip on the luxury electric vehicle market. They boast a substantial market share, and it's like being the king of the hill in a competitive neighborhood. In fact, they held a remarkable 59% market share in the premium segment back in July. That signifies their strong position in the world's largest automotive market. But there's more to NIO's story. Their financial outlook is on the upswing. Projections suggest that their gross margins, which took a dip to just 1% in the second quarter of 2023, are on track to bounce back into double digits in the third quarter. And it doesn't stop there. NIO plans to rev up its deliveries, aiming to keep them consistently above 20,000 starting in the fourth quarter. They're gearing up their supply chain to support monthly deliveries of 30,000 units. But NIO's got more ace up its sleeve. They're all set to launch a mass-market brand called Alps in 2024. This move aims to help them scale up and improve deliveries, which can positively impact their overall earnings. What's more, it's essential to take a look at what the experts on Wall Street have to say about NIO stock. They've given it various ratings, and it's good to pay attention to these insights when you're thinking about investing. Out of the 11 analysts covering NIO, one considers it a moderate buy, while 10 others rate it as a strong buy. None of them say sell. So, the majority view seems quite positive. Now, when they crunch the numbers, the mean target price they came up with is $13.01. This suggests a potential upside of nearly 22% from the current stock price. And the highest target price goes even further, indicating a potential upside of over 81%. It's like getting advice from experienced travelers about the best route to your destination. Potential risks. Now, let's talk about the flip side of the coin. Like any investment, investing in NIO comes with its share of risks. One significant risk is NIO's sensitivity to China's economic trends. If the Chinese economy takes a hit, it could affect consumer spending, including their appetite for electric vehicles. Another factor to consider is the competition, and here's where global giant Tesla enters the picture. Tesla has been relentless in cutting its prices in China. In response, NIO had to lower its car prices as well. It's like a pricing battle in a crowded marketplace, affecting NIO's profit margins. So, before you jump into the world of NIO stock, weighing the promising aspects against these risks is crucial. Investing is like a balancing act. You need to consider both the potential rewards and the potential pitfalls. Take your time, do your research, and make an informed decision that aligns with your financial goals. It's like navigating a complex maze. You want to find the best path forward. So, in conclusion, there's the potential for a rebound in NIO's stock price. But remember, investing is a journey, not a sprint. It's like planting a seed and watching it grow over time. So, are you ready to navigate the world of NIO stock and potentially seize the opportunity for a rebound? Join the conversation in the comments below. And while you're at it, make sure to smash the like and subscribe buttons down below. Additionally, if you want to know more about NIO, I highly recommend watching this amazing video. Simply click this video right here. Thank you for tuning in and stay tuned for more exciting content in the future.